Hello everyone, in this video we'll discuss about the net worth and how to calculate it. So by the end of this video, you will be able to know what are the assets, the liabilities, and how to calculate your net worth. So let's start. The net worth is basically assets minus liabilities. Assets are all those financial items that can produce positive cash flow, and liabilities are all those financial items that produce a negative cash flow for you. Okay? So in terms of assets, there are various categories that you can go through. So one can be cash deposits. So this is the amount of cash that you have in your bank account. So let's say, for example, I have $20,000 on my bank account. I can put it here. So here in the investment account, you include the value of all the portfolios that you have among the various brokers. So let's say that you have $25,000 in investments. In retirement account, here is if you have a specific retirement account that usually it's tax deferred or has some benefit on taxation, you can also put it here. Let's say that you have it at 10,000. Employee benefits, here you include all the benefits that you receive from your employer. So for example, it could be the present value of the medical insurance. It can be disability insurance. It can be any other kind of benefits that you receive from your employer. So let's say 1,500. These are all assets, so not really cash flow, but the asset side. No mature stock options. Here you can include all those options that if they were matured, you could include it here in the employee benefit. If they are not matured, you include it in this area because it will allow you to understand which are the assets that are more likely to materialize when compared to the assets that are less likely to materialize. Here we can put, for example, 8,000. Okay. Stock ownership in private businesses. Basically, here it's the valuation of your equity ownership in a private business. Here it can be 0, for example, if I don't have any investments in private businesses. Employer pension plan. This is when your employer provides your pension plan to in some way cover your retirement. Here you can say 15,000. Cash value of your life insurance policies. Here you can see, for example, 10,000 as well. Here, roughly, the cash value of a life insurance policies is that portfolio value that is behind the life insurance that you subscribed. The real estate, if you own a house or you own a property, you can include it here. So, for example, 300,000. Other personal assets, let's say we have a car, we have a phone, we have clothes, we have a motorbike. Everything else that do not fit in the previous categories will be included here. So here we can see that the total financial assets are around 429,500. Now, to arrive to the financial net worth, we need to understand what are the liabilities. So, for example, let's say that with my consumer debt, I financed a portion of my other assets. So, for example, the car and the motorbike, something that we strongly disagree with, but it's fine. So, let's say that we have 25,000 in debt. Then we have a credit card balance 1,000 in negative. Mortgage loan, so we had an house of 300,000. The mortgage is 250. Other debt, if you have student debt or any other kind of debt, you can put it here. So let's say 80,000. Here, margin debt on brokerage account is when you borrow money on your broker to invest more money that you have in your account to increase your exposure to the market or to a specific security. Here we can say it's 0. So we can see that by looking at the asset liability statement, this person has a financial net worth of 70,500. So a positive one. We can also then, to consider all your assets, not only your financial assets, also your human capital and the future consumption needs and bequest goals. So human capital is basically the present value of all the future cash flow that will be generated with your current employment or your forecasted business career. Okay? In terms of future consumption needs, these are the present value of all the future consumptions over the coming years. So while the human capital is a positive number, the future consumption needs is a negative number. In terms of bequest goals, these are those goals of donation, leave it to foundations, etc., or leave a certain inheritance to your children. So to calculate this, we can go to the second tab, which is human capital. Here we can see that we can start by the end of this year with a starting salary of $50,000. Salary growth here is just the salary growth expected every year, so you can change the assumption every year. I put some 10% increase just by saying, okay, I will get a big raise or I will get a promotion every 4-3 years, depending. I put it a little bit randomly, so do not rely too much on these numbers here, but it's just to give you an idea. Discount rate here, what I use is the return that is currently given on a euro base on low risk assets. The discount factor is only that factor that multiplies your salary and will give you the present value of that salary. And basically it's 1 divided by 1 plus this number. So this is the interest rate at, this is 1 year. So this is the value that actualize €1 in 1 year. Okay. And we did that for all the cash flows in future to arrive then to their present value. And then this is the sum that gives you the total human capital. So we see that the human capital for this person is probably one of the most important assets that he has, so or she has. So we really need to also be careful in protecting it. So insurance against liabilities or some protection of this sort might be quite fitting if it was not already taken into consideration. In terms of future consumption needs, it's similar exercise. It's just the opposite. So instead of putting starting salary, you will put here, I'll just copy paste below. So you will put here yearly consumption, and here you have 35,000, for example, and the yearly consumption can be 2% increasing forever, apart from when there are some big changes in the personal life. So for example, let's say that around this time you have a child, and here so the increase is by 30%, and then we have discounted consumption, and then we have here the future needs. Voila, we just put it here. Bequest goals, let's say that we don't have any bequest goals for the moment. And so we can see that in terms of financial prowess, this person has $73,000, but in terms of economic net worth, so all the potential for generating money is a little bit higher at 432,000, because the difference between the human capital and the future consumption goals, the future consumption needs, is quite high. You can really see that these are future and a little bit more unclear and variable items, therefore will not appear on the net worth statement of most of the people, but it's a very nice indication for you to understand your current financial situation. If you see that you want to have a lifestyle that is way above your current consumption, so for example, if here we want to increase the consumption at 200,000, for example, we can really see that we will have a net worth that is negative now, because our future consumption is much higher than our human capital. So to recap, we discussed what are the financial assets, the financial liabilities, the economic assets and economic liabilities. I hope that now you have a clear picture of all these drivers. Let me know in the comments if you have an economic net worth, positive or negative. And if you want to know more about this stuff, there is a link in the description below. Cheers, guys.